Good afternoon and welcome to Conversations to Promote Inclusive Economic Competitiveness. And thank you for joining us via Zoom or Facebook Live. My name is Gar Kelly, and I serve as the Regional Program Lead at the Federal Reserve Bank of Chicago, and I work within the Community Development and Policy Studies Division, where we seek to improve the socioeconomic prospects of low and moderate income people, in part by working with community leaders to bring development and reinvestment opportunities to underserved communities, as well as promoting fair access to credit and financial services. Now, as a Fed employee, I'm compelled to say that my comments are my own and not necessarily those of the Federal Reserve Bank of Chicago or the Board of Governors. And let me take this opportunity to thank the sponsors of the First Friday Conversations series, LISC Indianapolis, Innopower, and the Indianapolis Recorder. For our first-time viewers, this is the third session in the First Friday series. In April, speakers from SENER, ISBDC, Urban Land Institute, Bankable, and LISC talked about a range of financial resources and learning opportunities for businesses. In May, building upon April's sessions, speakers discuss additional resources that exist to help businesses further refine their business plan, get into prototyping or product development, plan for marketing and growth, and ultimately think about their real estate space needs. Today's session is particularly important and timely as our economy is reopening after the COVID-19 pandemic. Many businesses seek to resume their operations to achieve, in many cases, the level of activity their enterprises enjoyed pre-pandemic, while other aspiring entrepreneurs seek to access capital and services to realize their dreams. The pandemic taught us that small and minority-owned businesses serving or located in low and moderate income communities were most severely impacted as many businesses shuttered as they were unable to access, for a variety of reasons, the various relief facilities to sustain their operation. And so, building on the first two sessions, today we will explore access to capital, where our panelists will highlight the financial products and services available to emerging entrepreneurs and developers in Central Indiana. In addition, we will hear what lenders expect from prospective borrowers seeking capital. So, joining us today are Anthony Bridgman, Vice President, VP of Relationship Manager at PNC Bank, Lindsay Malachy, Economic Development Specialist at the U.S. Small Business Administration, Steve Meyer, CEO of Renew Indianapolis, Rick Pryor, Executive Director of Entrepreneur Services and Business Ownership Initiative at the Indy Chamber. Let me tell you about today's session. Each speaker will speak for 5 to 7 minutes about the resources or programs they offer. Afterwards, I'll ask each panelist a brief question, and then we'll open it up to the audience to ask their own questions. Please feel free during the presentations to drop questions in the chat as we go along. Well, I've said a lot and probably stumbled through quite a few words. So now it's time to hear from our speakers, and we're going to start with Anthony Bridgman from PNC Bank. Anthony.
Thanks, Gar. It's a pleasure to be here. Anthony Bridgman. I'm Vice President at PNC Bank in the Community Development Banking team. So I'm a relationship manager. So that's just a title that just confers that I essentially do lending, working with entrepreneurs, small and large businesses. Specifically in our group and the community development banking team, we are charged with identifying opportunities to invest in low and moderate income communities throughout the state of Indiana, where PNC may have a depository footprint. So we specifically do that through loans, whether those are kind of traditional loans or investments. We typically call a bond debenture, or we also do investments into other financial institutions like credit unions that support low and moderate income communities, as well as community development financial institutions, or CDFIs for short. So we're always actively looking for ways that we can support revitalization in communities. A lot of the type of work we do revolves around affordable housing development, or development of new market rate housing in areas that are in decline, that may fit with what the community's needs and interests are. There's a lot of times communities have plans around, they may already have a really good mix of affordable units, and they may be looking to have more mixed income units in their communities, and in those cases we are happy to support folks as well. So we have products to support specifically looking at entrepreneurs that are in the real estate space. We have products to support the acquisition of property, the rehabilitation of property for more intense uses, whether that is for residential, whether that is for office, or some other type of a special purpose type of use that may have some kind of transformational opportunities for communities. So one of the things we've been we've kind of stepped out in terms of what we can provide is we provide capital through the Opportunity Zone program. So PNC has equity available to invest in federally designated opportunity zones. And so we're always actively looking for projects that will kind of provide that double or triple bottom line. To kind of meet the needs of community, obviously are successful and meet the bank's needs, but then also kind of meet the kind of the broader opportunities if we're very lucky enough to be working with a developer of color or minority developer. That would be an extra opportunity to serve our community. So just in short, we just recently announced an $88 billion community benefits plan, and that was in part with the acquisition of a new banking partner, BBVA, which was ratified about a week ago. And so as we're embarking in new markets and in our existing footprint, in our community development banking team, we're pledging over the next 4 years to invest $14.5 billion in what we do in community development banking, which is affordable housing development, neighborhood revitalization, support for nonprofits and small developers that are working in the space of creating greater opportunities for low and moderate income communities.
Thanks, Anthony. And now we'd like to hear from Stephen Meyer from Renew Indianapolis.
Thanks, Gar, and thank you for having me. And I'm happy to be here today to talk about our two subsidiary CDFIs. We have one that focuses on small business lending called Build Fund, and we have another one that focuses on affordable housing lending that is called Edge Fund. And Anthony mentioned CDFIs, community development financial institutions. those are essentially mission-driven lenders. We're certified by U.S. Treasury, and we have a certain level of flexibility that traditional banking institutions don't have, but we are still a lending institution, so we have underwriting criteria, but we really focus on community development projects. And we are also responsive to our target market by having representation from the community on our board and on our committees that are reviewing and approving loans and underwriting criteria as well. So we're very tied to the community, trying to close those gaps on projects that are right on the edge. As far as the products that we offer, on the Edge Fund side, we have single family mortgage products, both for new homeowners and to refinance existing mortgages. They're called HomeSmart and IndyAmp respectively. And then we also do lending on the multifamily side called Bridge Smart. Most of those are tied to low-income housing tax credit projects, doing equity bridge lending, and trying to preserve affordable housing through the low-income housing tax credit program. And then on the small business side, under Build Fund, mostly we do loans that are very similar to SBA. I guess it's helpful to talk about what we don't do. We don't do micro lending. Most of our loans start at about $100,000 at the low end and go up to about $1 million. A lot of commercial real estate, small businesses that are looking to buy their location or expand a location. We do some equipment lending, and increasingly we're working on working capital loans for businesses as well. So, we are more flexible than banks, but we often work together with banks. We do a lot of joint lending, and also our goal is for our borrowers to not be repeat borrowers of ours. So we want to get them into a relationship with a traditional financial institution. So how do we help them go from where they are to where they can have a relationship with Anthony or somebody else at a bank? So we go into our projects with that in mind, as well as supporting businesses or developing additional affordable housing, things like that. So.
Thanks, Stephen. Now we will hear from Linda Maliki from the U.S. Small Business Administration. Linda?
Thanks, Gar. I'm Lindsay Malici with the U.S. Small Business Administration. Happy to be here. We're an independent federal government agency that's been around since 1953, and we help small businesses start, grow, expand, and recover. And so we do that by offering counseling, capital, and contracting resources. So we're here today to focus on the capital side, but I just wanted to briefly mention on the federal contracting side, we also have certification programs to help minority and women and service-disabled veteran and other business owners that are typically under-resourced to compete in the federal marketplace. But back to the capital side, since that's what we're focusing on today, I think it's helpful to explain the role of the SBA in small business lending. In most cases, we are not the actual lender. We are the government guarantor. So we partner with private lenders, like some of the folks here in the meeting today. And if there's something about the deal that the lender deems maybe a little risky, maybe it's a credit issue or a collateral issue or something about the deal that doesn't check all the lender's boxes, the SBA can step in and offer a government guarantee to make it less risky for the lender. And the terms are negotiated with the lender. That's the small business's main point of contact. But by utilizing an SBA guarantee, oftentimes the lender can offer lower down payment options or longer repayment terms or things like that. So I'll kind of give a brief outline of some of the different loan products that are SBA backed. We have an SBA microloan program. So these are offered through nonprofit mission-based lenders like the Business Ownership Initiative. Rick's here today. So mission-based, they're typically focused on helping new businesses that maybe don't have the track record that a conventional lender is looking for, or again, minority, women, veteran-owned, or maybe in a rural or low-income community. So that's really where they excel. And these SBA microlenders also provide one-on-one technical assistance to help the borrower develop their business and, kind of act as a stepping stone into conventional lending. We also have community advantage lenders that operate very similarly to the SBA microlenders in their area of focus, but they can go up to $250,000. And we also partner with, your traditional lenders like at credit unions and banks. They can offer small business loans up to $5 million with an SBA guarantee on it. So our loan products can be used for basically any legal business activity, as long as what we're really looking for is active participation in the business. So we don't really do a lot of, rentals or passive type of business models. We're typically working with for-profit businesses where the business owner is actively involved in operating the business. On real estate, we have a 51% owner occupancy requirement. So that's kind of where we fit into the picture. But before a small business approaches a lender, it's really important to have a game plan and be prepared. So we do partner with what we call SBA resource partners. They basically provide one-on-one counseling assistance to help small businesses with their business plan, with their expense sheets, financial projections. From an SBA perspective, we might encourage the lender to consider collateral, but we're primarily interested in seeing the loan being repaid from the cash flow of the business. So especially in today's credit underwriting environment, it's really important to have these things ready to go before approaching the lender with a funding request. So our SBA resource partners are the Indiana Small Business Development Center, SCORE volunteers. We have 2 women's business centers in Indiana, and we have a veterans business outreach center in Michigan that covers Indiana. So I definitely recommend reaching out to those partners. They can also help small businesses determine whether or not a loan is even the right option, or if maybe investment capital would be better, or maybe they want to start with a crowdfunding. Those are kind of our partners that are the boots on the ground and can help businesses weigh those decisions. So we do have an online pairing tool called Lender Match. So if you just go to sba.gov/lendermatch, you can, kind of give a brief description of your deal and your business. And then that information is shared with SBA approved lenders, and they can reach out to the business owner to start a conversation about their deal. So in addition to, pulling on any existing banking relationships you might have, even if they're personal accounts, or getting referrals from friends, family, your dentist, your chamber of commerce, and places like that, I definitely recommend Lender Match. It's an easy tool to use to help connect with lenders.
Thank you so much, Linda, and my sincerest apologies for mispronouncing your last name. It's Malachi. Being a person named Garvester, I'm very sensitive to how my name is pronounced.
Albanian pronunciation is really difficult. Don't worry about it.
Thanks so much. And last but not least, we're going to hear from Mr. Proctor, from Business Ownership Initiative from the Indy Chamber.
Thank you so much. I appreciate the invitation to be here today and excited to be able to present what we do. So Lindsay mentioned that we are an SBA micro lender. So a BOI was founded, Business Ownership Initiative was founded about 25 years ago as the Neighborhood Self-Employment Initiative. And it was originally a business coaching organization only. And after about 10 years or so of doing that, there came to be sort of a corporate realization that you can only coach businesses so far in that journey before the inhibiting factor becomes access to capital. And so we founded a loan fund at that time, and then eventually became qualified to become an SBA micro lender. And so as Lindsay indicated, we do use the SBA as a source of funds. So Lindsay, for 20 years in banking, I was taught to tell clients the SBA doesn't actually lend money directly. And then I took over an organization as an SBA micro lender and realized that most of my loans all are with the SBA. So I have to apply for loans from the SBA in order to give clients access to capital. And in now the 10 or so year history of our loan fund, it has grown considerably, and we're very excited about that. Originally, we had kept that loan fund as sort of continuing with our mission of coaching first, and then introducing the capital to our clients that found themselves in need of capital. And so about 2 years ago, 2 or 3 years ago, we made a decision to sort of change our philosophy in that and allow clients to approach us from either direction, whether they were in need of coaching or whether they were in need of capital, and greatly open the front door of our access to capital here in Indianapolis. And one of the ways in which we did that was to pursue, as Stephen had said, becoming a community development financial institution. And so by basically becoming certified as a financial institution that specialized in lending to small businesses, and specifically minority-owned businesses, Black and brown entrepreneurs, women entrepreneurs that have had distinct obstacles with accessing a capital to operate their business and be able to provide that support. Lindsay mentioned that we are also one of the women's business centers in Indianapolis. So I am currently sitting in the Alexander Hotel in downtown Indianapolis, where we have just wrapped up our 7th annual Central Indiana Women's Business Center Women in Business Retreat. We had some amazing speakers that provided a tremendous amount of support, and it's one of our first major in-person with masks and social distancing events that we've hosted, and so we're extremely excited about it. Lindsay, we missed you this year, and we hope to see you next year at the event. So we're very excited about that. But we do provide that coaching and access to capital, and we balance those things. CDFIs and micro lenders across the country do provide access to capital, perhaps to clients that may have that low credit score, that can't access capital at our traditional financial institution partners. And we coach them through that process, as Stephen was saying, to provide that capital where the cash flow warrants the ability to provide the capital, and then coach them to a point at which we may be able to hand them back over to Anthony. So Anthony might call me up and say, Rick, we've got a client that, his credit score is just too low, or Gar, as you were saying, maybe that collateral percentage in the loan is not quite there. And often small business owners don't don't understand all of the bank speak. And so we often act as interpreters as well to be able to assist clients in understanding what the bank is looking for, provide that access to capital right now when they need it, and be able to coach them along and then hand them back to their financial institution and be able to do that. So some of the basic products that we have outside of coaching is a traditional fixed term loan. We also are still operating a rapid response loan, which is a loan in $5,000 increments up to $25,000 for businesses that have been affected by COVID. Early on, of course, the loans that we were doing were businesses that were impacted in such a way as to have little to no operating capital, no cash flow. And we were able to bridge those gaps for them while they were waiting to reopen or determining how to proceed. And now, more increasingly, what we're finding is we've had businesses, clients that were impacted last year. They maybe engaged with those buzzwords. They pivoted, and they did this, they did that. Many of them we found have sold off assets in the last year, and now that their businesses are reopening, they're needing to acquire new assets. One of our clients just recently, actually, that we're about to finalize a loan with is a landscaping company who sold his primary piece of equipment was a backhoe, little bulldozer, and now that things are starting to open up, his cash flow has again started growing, and now he needs to go back and we're looking to upgrade from what he had because he had sold that off. Small business owners are amazing and resilient people, and I think of him selling off an asset that he knew he needed, but he did it in order to put food on the table at the house. And now we're able to come back and support him in that growth cycle once again. And then we're also piloting a loan right now called our gap financing loan, which is a growth through accelerated payment. It's a construction-based loan for businesses that are engaging with small contractors, that are engaging with general contractors and providing an access to capital loan for them. The loan product is designed for minority business owners, women business owners who are looking to work with prime contractors particularly on construction sites. We're also looking to expand that program in the future to include an aspect of procurement and even service. And so we have pilot loans going on in all of those areas right now, and very excited later this year perhaps to open that up more broadly. We do these through all of these programs, including the Central Indiana Women's Business Center. We also have the Hispanic Business Council, and we are finalizing the beta phase of our program that's been in the work for about 2 years now, which is called Advancing Black Business. And we're very excited about that as well.
Wow, you covered a lot of ground, Rick, and you know that CDFIs have a special place in my heart, so I'm going to express my bias there. But I know that you and the Indy Chamber, BOI, your rapid response program, you did a lot of work during COVID-19. Can you share with some of our viewers some of your observations and how they might be better prepared for the next downturn? Because it caught a lot of businesses off guard. Perhaps from what you saw, it could be advice going forward to some of the folks who are interested in driving a business in prosperity.
Sure. So we did, as I mentioned, our early philosophy of lending was more of an internal coaching leading to capital philosophy. And as a result, we averaged about 1 loan per month for several years and did about $250,000 to $350,000 a year on average in lending. Since our philosophy changed, our pipeline had grown considerably, and we were beginning to close, many more loans, averaging much more. And then when COVID hit, we really had to do some soul searching in that philosophy. And what is our role as a CDFI? And while many financial institutions and CDFIs included across the country held their breath and as a result held their loan capital in order to wait to see what would happen. We developed the rapid response loan program and opened our doors more widely than they had ever been opened before. So where we averaged 12 loans and $300,000 on average a year in 2019 and earlier, last year we did 245 loans and then we did some grants on top of that totaling over $21.5 million. And so we threw those doors wide open in order to be able to get access to capital to the businesses that needed it. And Gar, this may be more of a bankery thing to say, but I'm very proud to say that 99.2% of our loans that were provided at a time where historically cash flow was there, but none of us had any idea what it would be like 3, 6, or 9 months down the road. 99.2% of those loans are on time and have payment arrangements to fulfill their obligations, which to us was just amazing. Early on in the pandemic, we were thinking, I was doing calculations that would have had a much higher default rate, and 99.2. I see those, I pull those numbers, and I just am amazed. I'm amazed.
Thanks so much, Rick. I'll get back to you later in the program, but I'd like to kick a question back to Anthony, who started us off today. And my question is, what would a real estate entrepreneur need to bring to a lender to determine the feasibility of securing a loan for acquisition and/or development of an income-producing property, whether it be an office, retail facility, or residential?
That's a great question. Thank you. Yeah, just some basic things. I mean, obviously, want to understand what the concept is. So what's that plan for that project? Someone need not have a drawing, right at that stage, but just an idea of what the project is, and in terms of its income producing property, they would have a pro forma, which is essentially the financials of how the project operates. So the incomes streams available to the project, the expenses specific to the project, and usually you want to see that over a series of years, 10 years, as a minimum of a projection. Because that's kind of the, at the outset, that'd probably be the term of a loan. Maybe a loan would be about 10 years. So for that 10-year term, you want to see what those projected income and expenses would be. So that's an important piece, because that shows the amount of homework that the entrepreneur has done to understand the type of project that they have, and the likely success that the project will have to support debt, but then also be able to support any type of equity investment that's brought to the deal, to support returns to the developer and any investors. And then the other piece is with any loan, we want to understand the character of the individuals that are coming to us. So what's their experience level in developing this type of project? So if it's what's their experience with acquiring or running a rental property, for instance, or what's their experience with an office development or new construction. We want to understand what their level of experience and then what's their capacity in terms of their own personal financial wherewithal, or if they're working with an organization, what's the organization's financial wherewithal to be able to to write a check or to support if there's some kind of cost overruns or such, or to be able to support the debt. So not things that are necessarily onerous, but just to get an understanding of the capacity of the project, capacity and experience of the individuals and their experience with kind of developing or managing or operating this rental property. And then the other piece would be depending on what type of project. If it was an office project or retail project, who are the tenants? It's a little easier in a multifamily setting because you have a broad pool to pull from, but in an office or retail setting, you're going to want to understand who are those tenants? Do you have tenants in mind? Is it kind of like you're building something to suit tenants that will come, or do you have tenants already in place? How are those leases structured? Those types of tenants. So those are some of the things we would want to understand. And then, of course, understand the sources of capital that are coming to bear to do the project. So, in our space in community development banking, we have a really strong expertise with, understanding like federal sources of capital, new market tax credits or low income or rental housing tax credits, federal programs like home or the community development block grant dollars or local dollars that may be specific to a particular market, from a municipality, grants from the Federal Home Loan Bank. So, we're used to seeing lots of different types of grant sources or tax credit sources that could come into a project, and we have a really good understanding of how those may fit with kind of traditional pieces of capital. So a lot of times we do a lot of walking alongside a developer, especially in terms of providing some technical assistance and making connections to resources. And so, when we're working with a smaller entrepreneur, real estate developer, I think that's something that we feel very passionate about, is being able to walk alongside them and, kind of make those connections if need be with different leaders that are sources of grant capital and such, and then kind of helping to understand, how those sources of capital may work.
Thanks. So one of my takeaways from your response to my question is not only are you a provider of capital, but in many cases you are a partner to a particular entity that's seeking to drive a deal. And so I'd like to switch over to Stephen for a moment, and not to put words into Anthony's mouth, but it sounds as though perhaps some of the transactions that a commercial banker would do would probably be to a more sophisticated or more experienced organization. And so, Stephen, my question to you is, what should first-time acquirers of commercial property, what do they need to consider that they may not necessarily be aware of in pursuing a particular transaction?
Yeah, so Rick mentioned that CDFIs provide technical assistance, and he talked about the business side of it, but a lot of the technical assistance we provide is related to the loan that we're trying to close. So if it's commercial real estate, we walk them through that process, especially small businesses that have never purchased commercial real estate before. They have really no idea what they are going to need to do. So, they've run a business, but they've never had to buy a building before. So we help them through that. So, first of all, the one thing that we always tell people they have to do is have a phase 1 environmental site assessment. Environmental liability is joint and several. So it doesn't matter whether you caused it or not, you need to protect yourself from it. So we walk them through what that means. We do a lot of lending historically to brownfields to try to get the site to closure so that it can be taken out by a bank. So we're very familiar with that process and how to get a site status letter from the Brownfield department at the state, walk them through what that kind of timeline is, what the expectations will be, help them find consultants that can help them get closure on those environmental issues that may be out there. Things like even how to order a survey, how to read a title commitment, if they're doing tenant improvements, how to negotiate a commercial lease, what they should be looking out for. If they are going to have tenants, you know, looking at what their leases are going to say to make sure that they're protected from their potential tenants. And then if the building needs some improvement, how to develop a scope of work, how to identify some contractors that can do that kind of work with that kind of experience, especially with older buildings. There are some contractors that are experienced with that type of work and others who aren't. So we can guide them in those different directions as well. So it really just depends on the sophistication of the borrower and the timeline that they're on, but we can help in a lot of different ways.
Great, thanks. In the TA category, I want to kind of just switch over to Rick for a moment before asking Lindsay to clarify a couple of things for us. Rick, can you just share with us from your perspective the types of TA that can help small businesses become loan ready?
Yeah. So Stephen really hit it on the head. I think of the analogy of somebody that was trying to get a job, maybe their first job, in a retail shopping center, and they're told no, they're turned down for the job because they have no retail experience, and they say, well, how can I get a job with retail experience if I can't get a job with retail, you know, in retail? And often for the small business owner, it's the same thing. Turned away, you know, from a traditional financial institution because they don't have the right answers, they don't have the right financials, they don't have the experience of going through that process. And so Stephen is perfectly right about aligning our coaching to the needs of each individual business. And often it's around those business financials. You were asking about what did we learn through the pandemic? And that was one of the things. When we were processing PPP loans, we were assigning each business owner to a specific coach to be able to walk them through that process. And some of our business owners, it ended up qualifying. So they were a qualifying business owner, but had no business financials whatsoever to begin with. But yet heard about the program because the SBA did a wonderful job doing a lot of the promotion for it. And so came to us and said, well, how do I do this? And so we had to walk them through that process and help them prepare their financials and put together a profit and loss report and do these things so that they could ultimately get the resources that they qualified for all along. And so a lot of our coaching falls around that. But the other thing that we learned through the pandemic, particularly around coaching, was that as we were exposed to over 2,000 new businesses that we worked with throughout the pandemic in loans and grants, that there is a broad and diverse and wide range of topics that they need help with. And while there may be a strong percentage that are financials, that's not the only thing. And sometimes it's not associated with the loan. And so we forged a partnership with the IU Kelley School of Business here at IUPUI in Indianapolis to be able to engage with their professors that have a broad background in lots of different topics as experts, and ultimately expanding to also their network of alumni here in Indianapolis that have expertise in law, as CPAs, in online expertise, technical expertise, HR, other things like that, and be able to intake a client and assess their business needs and assign them to a local expert that is able to work with them to help them grow as a business owner. And so it's a way for us to be able to expand on the one coach, one client concept to be able to have a volunteer army of people in Indianapolis that are fully engaged in assisting people with their area of personal and professional expertise to be able to help those small businesses advance. And so it's been a great partnership and one that has been really meaningful for those that are involved. I saw a question pop up though, what is the cost of coaching? And so I'll just go ahead and
we'll get to that
okay,
later.
I'm sorry, go ahead.
But thanks anyhow. Lindsay, you being a government agency and also me working at the Federal Reserve Bank of Chicago as a central bank, oftentimes people confuse the fact that since we're a bank that we provide grants. And since there are SBA loans out there, I'm sure many of an aspiring business person may also think the SBA provides grants. Can you kind of set the record straight on what it is the SBA does in that regard? And also, I have a follow-up question for you.
Oh, sure. Yeah, I get this question a lot. I think those late night TV commercials that encourage people to get the free government money don't really help. But yeah, we have a lot of people who call who either want to start a business or expand a business. And the first question is, do you have grant funding available? And for the most part, except for some of the like pandemic relief assistance, which I'm not talking about that, I'm talking about our normal programs, our loan programs. So we typically do not grant money directly to a small business. Most of our federal grant to support small businesses goes to nonprofit, other state and local government agencies, or organizations that provide that technical assistance to small businesses. So, you can always find any federal grants at www.grants.gov. But the reality is most of the time, those are not designated for small businesses. That's not to say that there aren't small business grants out there through other types of organizations, whether it's a state or local government organization or a nonprofit. One in the central Indiana area that I'm aware of that just closed is the Drew and Lauren Holiday Social Impact Fund that was designated for Black-owned businesses in Indianapolis and other cities around the country. So, they are out there, but, typically grants are going to be more specific than general business startup or business expansion. They're specifically designated for Black-owned businesses or brown-owned businesses or women-owned businesses, or they're for a specific purpose, like innovative research or energy efficiency improvements through the USDA. But general business grants are hard to come by. But while we're on the topic, I just do want to mention the American Rescue Plan allocated $100 million for a new program called Community Navigators. And this is going to be run through the SBA for nonprofits and government and other types of organizations that assist small businesses. And the point is to help build coalitions that support under-resourced business owners and, minority and women and veteran, et cetera. So, if you are on this listening in and you're that type of organization, I definitely recommend looking into Community Navigators because it's really exciting program and it's open until mid-July.
Oh, thanks so much. We're beginning to run out of a little time, but I wanted to kick a question back to Anthony. And as our commercial banker on the panel with an eye towards community development, what types of transactions really excite you the most and that will benefit the communities that we care most about?
They all do. Every transaction that we do, I'm excited about. Whether we're working with building a single family home in a underserved area, those are great projects. Whether we're supporting a a provider of affordable housing, regardless of it's 4 units or 10, be able to refinance, going from a 7% interest rate to refinancing and getting them something, with as low as interest rates have been, it's great benefit for those end residents there in the community. And, we've done those types of projects, or even if it's, a bigger project, or even working with a nonprofit where we're able to provide, a great nonprofit serving community members with, some working capital financing. We're excited about all of it's soup to nuts. The types of projects that we do. They all really have a tremendous impact on the underlying communities, and we see it. But maybe even the ones that are maybe it's not officially super germane to this, but we've funded expansions for homeless shelters. And those have been really awesome. We've built group homes for people with cognitive and physical disabilities, and those are always great to be able to to go out to that ribbon cutting and see those tenants there, and the community, surrounding community members there. Those are really fantastic community projects, and some of that stuff doesn't get any better than that.
Excellent, thanks so much. And we did have a question from our viewers. Rick was about to begin to answer it, and the question is, what is the cost for coaching? So Rick, I'd like for you to enter into the response to that, and maybe perhaps we might hear from Stephen as well around the coaching that's provided by Renew Indianapolis through its 2 funds.
Yeah, absolutely. And Lindsay put an answer there in the chat as well about the fact that these SBA supported programs, the SBA supports us as a 501c3 and a micro lender and that support that they provide allows us to hire coaches and pay their salaries, so that there can be no cost added on for the borrower or somebody that just reaches out to us. So no cost, and that's a great aspect. We're asked about that a lot, and there's always some philosophical question about whether or not we should be, and the answer is we don't want to, because we don't want to create any obstacles to a business owner, particularly Black and brown business owners, between them and their dream of success through their small business. And so being able to remove cost for the coaching as an obstacle truly removes that as an excuse for why someone cannot be successful. And so we are extremely proud of our partnership with the SBA. But I'll brag on Anthony too right now that Anthony's programmatic work here in Indianapolis, PNC and banks like PNC, we need banks like that. They may not be able to do a loan for a particular client that doesn't meet the qualifications that they have in underwriting, simply because they report to shareholders and so forth, and so they have to meet certain qualifications. But by working with organizations like Build Fund and Renew and LISC and Bankable and BOI, we're able to provide that first round of access to capital and coaching, the coaching aspect of it being free to get them to the financial institutions. And so excited about the work that they do in the community.
Stephen, I was going to ask you to follow on to that question. However, Rick said something that's really important. And so I want to ask you the question, how does a business owner know if they should go to a bank versus a CDFI first?
More than likely, they don't know. And I think the important thing is to reach out to one of us. We work with Rick, we work with Bankable, we work with Anthony all the time. And so if we're not the right organization, we will direct you to the right organization. And I think everybody on this call is the same way. I think, as Rick said, we don't want to have any barriers to people getting access to capital. And so, Rick answered the question about coaching. I would hate to put a number on it, but we do provide technical assistance for 10 businesses for every one loan we close. So we help a lot of people find resources one way or the other, whether or not they're getting a loan from us, whether they're getting a loan from Rick or Anthony, Bankable, any SBA product. So I think the important thing is that they reach out to somebody, and we do try to make it as easy as possible. Our application is all online at buildfund.org, and I know Bankable and BOI all have the same as well. Somebody will reach out to you, and it doesn't take us long to figure out that we aren't the right fit, but maybe Rick's organization is. So we will certainly steer you in the right direction.
Thanks so much, Stephen. We've got basically 2 minutes to go. And so in wrapping up today's wonderful session, I'd like for our speakers perhaps to share one final thought or comment for our viewers. And we can start with you, Steve, since you were last. The last shall be first.
I would just say, don't be intimidated. There are lots of people who want to help everybody out there. So, just reach out to us. We're happy to help.
Lindsay?
Yeah, just to kind of echo the same sentiments. If you don't know what you don't know, or don't know where to start, don't know where you fit in the picture, reach out to the SBA resource partners and the other folks here on the panel. I dropped a link to where you can connect with our resource partners in the chat.
Great. Rick?
There you go. I would. Why not just echo what these two great individuals said? I mean, really, one of the things that we learned through the pandemic was there were many business owners that came to us when they finally arrived at our doorstep. They just said, "I just didn't know. I didn't know this was here," and they were so thankful for the support that the SBA was providing through PPP and EIDL and other products. There's lots of acronyms out there. You don't have to know them all. All you have to know is call Stephen. All you have to know is call Anthony. And if one's not the right, they'll get you to the other. So our doors are wide open. Raise your hand, walk through the door, engage, and we're here to help.
Thanks so much. And Anthony, you have the last word.
Yeah, just that, business is open at PNC, and we're committed to bringing the full breadth and scope of PNC's resources to the community, to that entrepreneur. And and again, just reiterating what was said, if we're not the best fit for wherever that business owner is in their journey, we will walk alongside you and identify who is the best fit. We've got a lot of great partners, great networks, with all the folks that are on the call, and we love to collaborate.
Fantastic. To our viewers, please join me in thanking today's speakers for an insightful discussion on access to capital. And on behalf of our speakers and our sponsors, thank you, our viewers, for participating today. And I'd like for you to please mark your calendar for the next conversation, which will be held on July 9th, where the topic will be ensuring investment. And lastly, you can view the recording for all 3 of the first Friday conversations on the Indianapolis Recorders Facebook page. Thanks again, and be well.